This is your LMAX exchange technical update for Friday, January 27, 2017. Euro dollar. So the euro has seen a nice correction out from that recent 14-year low at 103.41 from back on the 3rd of January, and this has extended up into the 107s thus far. The next key resistance comes in the form of that December peak at 108.75, and we could trade up towards that level over the coming sessions. At the same time, while the market holds below 108.75, there is risk for the market to stall out in favor of the broader downtrend and a resumption of declines back down towards and eventually below 103.41. 108.75 is going to be that key level to watch over the coming sessions. If the market can trade back below recent support, which comes in around the 105.90 area, it will officially put the pressure back on the downside, while inability to do so could suggest that the market's just putting in another higher low in favor of a continuation of this correction back towards 108.75. Sterling dollar. So cable has made an impressive recovery run over the past several days after the market had stalled shy of that October plus 30-year low at 118.40. The market traded down into the 119s, but has since recovered sharply. Next key resistance here comes in the form of that December peak at 27.75, and it will require a break back above that level to force a meaningful shift in the structure. Inability, however, to establish above 27.75 will keep the more medium-term pressure on the downside and potentially open the door for a retest back towards the recent multi-year low. Dollar yen. So dollar yen has been caught in a choppy consolidation over the past couple of sessions. Overall, the market is correcting off that recent multi-week high at 118.67. There is risk from here for additional downside below the recent lows at 12.52 and down towards the 110 area. But overall, this market is constructive and a higher low is sought out at the next major upside extension through 118.67 and towards the 120 area further up. Euro Swiss. Euro Swiss continues to trade lower. This market is now broken down to a fresh multi-day low, putting its sights on a retest of the 2016 base at 106.24. At this point, we would need to see a close back above 107.60 to take the immediate pressure off the downside. Aussie dollar. So Aussie looks like it could be finally ready to stall out after rallying all the way up to 76 and just beyond. At this point, the market has shown on a medium-term basis just how well capped it is on rallies up towards the 76 to 77 area. So it is a very real possibility that over the coming sessions, we see this market stall out in favor of an eventual resumption of declines back towards medium-term support going back to May of 2016 at 71.45. Dollar CAD. So dollar CAD has come down to some critical support over the past several days, testing but not breaking 130. 130 is a critical level and a psychological barrier that, if broken, could open the door for a more meaningful shift back to the downside. But until then, while the market holds above 130, there is risk for another bounce and resumption of gains back towards the recent multi-day highs at 136. Kiwi dollar. So Kiwi, just like Aussie, has seen this market run up in 2017, but also running into some good resistance. The market continues to show signs of putting in a major top off that 2016 peak just shy of 75. And so there is risk now for a lower top ahead of a bearish resumption back down towards some meaningful support, initially in the 68 area and then down towards 66.76. SPX 500. The S&P 500 continues its push to fresh record highs following a period of consolidation that we had seen roughly between 2230 and 2280. This break that we've seen this week opens the door for a fresh measured move upside extension towards the 2320 area. At this point, it would ultimately take a break all the way back below 2230 to take the immediate pressure off the top side and suggest a bearish structural shift. Gold. So although we've seen some pullbacks in recent trade in the gold market, this market continues to show signs of the formation of a major base after stalling out in the 1120 area in 2016. As such, look for this latest round of setbacks to be supported in the 1160 area in favor of that next higher low and fresh upside extension back beyond the recent highs that we saw in the 1220 area and towards 1250 to 1270 as the next objective. Ultimately, again, we should see this market trade higher as it's been basing out by that 1100 area, which could eventually lead to a retest of the 2016 peak at 1375. Only back below that 1122.75 low from 2016, from late 2016 in December, would negate the constructive basing outlook for the gold market.